Hello everyone, welcome back to my YouTube channel. We experienced the most volatile week in stock market. We see 1,000 points up on Monday and Wednesday, and then we see 1,000 points intraday swing during the market hours. And then we see the down days on Tuesday, Thursday, Friday. Regardless the rally in the Friday afternoon, we still see the market erased all gains made earlier in the week. In today's video, I will talk about how to trade to win when market sell off. I still believe Wall Street is the place to make the most cash flow when you most need it. And I still believe Wall Street is the place for you to make other people's money to create your cash flow without too much an effort. In the video, I will go over with you why cash flow is so important in today's market environment. And also, I will go over with you the trading basics. Believe or not, trading stocks is very straightforward and simple. If I can do it, so can you. I will also go over with you in this day and age, trading is almost free to do. Most trading platforms, either online or in the big brokerage, they are all offering commission-free trading. So there is no way for you to worry about the trading expenses. And also, I will go over with you why trading is better than a job. Most importantly, I will go over with you the ETFs, the ETNs that I will pick to make most profit during the market sell-off. For those of you who are new to my channel, this channel is all about easy wealth building. I'm a long-term dividend stock investor as well as a short-term stock market trader. I'm very active in the stock market. Each week, I will make 2 to 3 videos to share my knowledge and experiences in the stock market. You may consider to subscribe and hit that notification bell because I'm going to roll out a series of videos that will help investors, whether you are new to the market or you are experienced in the market, to elevate your game and then to weather this stock market storm. Why cash flow is so important, especially during this market sell-off? Because any investors nowadays are experiencing huge pain and see their gains washed away from them. Although it's paper loss, it still hurts. It will be great if you have very healthy cash flow at this point of time, because basically every stock on the market is on sale. And if you have the cash flow, you can easily dollar cost averaging down for your portfolio, make them at a very attractive price range. So eventually when the market do recover, you will sit on very healthy profit. Worst thing is we're not even sure when the market will recover. The coronavirus may last for a long time. It may even force people to stay at home to avoid to be infected. People may facing reduced income or no income at all. But still, people have expenses to pay. They have to pay for their mortgage, living expenses, as well as medical bills. And if people get sick, want to go to hospital, the ambulance itself is going to cost you $1,000 each trip. And if you want to be tested for coronavirus, the testing itself is going to cost you $3,500 to $4,000 US. And if you really get coronavirus infection, the hospital treatment and medications gonna cost you so much more than you can even afford it. I wish everybody has medical insurance. Even if you have, the medical insurance is not as good to cover all your expenses. You still have to have lots of out-of-pocket money. Therefore, cash is the king and always will be the king, especially when we're facing the market volatility. Fortunately, trading stocks is very simple and straightforward and doesn't require too much mathematics. Let's say one stock costs you $200 per share and then you purchased 100 shares. When the stock goes up $1 only, your profit will become $100 when you sell it. And then when the same stock goes up $10, then your profit will become a very attractive $1,000. And then if you choose to trade at the low price range stocks, let's say one stock costs you only $9 per share, and then you purchased 1,000 shares. Total cost is $9,000. When a stock only goes up 10 cents, your profit will become $100 when you sell the same stock. That's all you need to know. It's very simple. Trading stocks used to be very expensive. I still remember those days that they charged $19.99 per trade. A simple round trip will cost you $40. And then they reduced to gradually $9.99, $6.95, $4.95. And I still remember that I negotiated $2.95 per trade with E-Trade back in 2018. But still, because I do frequent trades, still eats up lots of my profit because of those expenses. Thanks to the revolutionary Robinhood M1 Finance and an interactive broker, they initiated commission-free trades. Finally, in the back end of 2019, Charles Schwab announced commission-free trades. And then finally, E-Trade, TD Ameritrade, and other major brokerage also adapted to commission-free trades. We are in an era that very, very lucky we can do multiple daily trades, small trades for free. Why trading is better than a job? Even an excellent job pays you $85,000 a year. Your take-home pay is only less than $4,500 per month. And then you have to work 40 hours per week times 4 weeks, plus the travel time and the preparation time and the unwinding time after work. You're adding another 2 hours each day. That makes you to work 168 hours per month. Divided by the $4,500 take-home pay, you are only look at about $26.8 per hour. As a trader, doesn't matter if you are a day trader or swing trader, your maximum working hour is about 3 to 4 hours a day. There are about 20 trading days in a month. That means you only need to work 80 hours per month. Like last month, I made about $20,000. I only traded 18 days. That makes my earning about $278 per hour. That is about 10 times more than a job can pay me. And then last Friday, I made about $2,000. I worked much less than 4 hours. Let's say 4 hours for the calculation purpose. That makes about $500 per hour. You are in the comfort of your own home. You don't have to dress up. You can trade in your pajamas. You can still make a lot of money while taking care of your family things. So you may ask, how did you make that much money during market crash? The answer is very simple. I don't trade any single stocks on my watch list because they all appeared red. I trade with volatility. When the volatility is high, TVIX, the volatility index, going up like crazy. Friday alone, it went up almost 30%. Let's look at a chart. I'll show you. This is a 6-month daily chart, which means each candle represents 1 day of trading. February the 21st, before the crash, the highest price is about $46. And then from February 24th until last Friday, which is March the 6th, it went parabolic. From $46 all the way went up to Friday's $201.56, which represent 339% up. So let me ask you, in this parabolic uptrend, how can you not make money? Another huge money-making opportunity lies on oil. We all know that on Friday, oil plunged 11%, the most since 2014. After Russia refused Saudi Arabia's request to cut down the oil output, the oil plunged so much. So on that day, the best to trade is DWT and DRIP. Friday alone, DWT went up 27%. DRIP went up 29%. DWT is an ETN that designed to inverse crude oil. It has a sister pair. It's called a UWT. When the oil goes up, you trade UWT. When oil goes down, you trade DWT. Let me show you the chart. So this is also a 6 months and 1 day daily chart. Each candle represents one single day. You can see from February the 24th until the February 28th. Market went down so much, the inverse oil DWT goes up almost parabolic, all the way up. And then it retraced a little bit, and then going up again on the 5th and the 6th the most. 6 alone, as I said, it almost went up 28%. From the day before the 24th until Friday, it went up 77%. How can you not make money in this environment? DWT and UWT has a future for you to watch the performance on daily basis. The future is called /CL. So every day before the market start, I will look at it. Either it is a green candle or red candle. Red candle means it will go down. The oil will go down. And then you can look at it as trend. It is on the downtrend for a long time. So there's a huge 2 candles both Thursday and Friday. So then you look at a daily chart to help you to decide when to buy what. This chart is representing UWT. When UWT is overbought, it's the time for you to buy DWT. When UWT is oversold like that, that means DWT is going the highest high. You must sell right away, otherwise the price will go down. It's kind of confusing, but think that way. DWT, D stands for down. UWT, U stands for up. That's how I remember. Another pair you can trade when the oil and gas going down so much, it's called a drip. Drip has a sister pair, it's called a gush. When the oil and gas goes up, gush goes up. When oil and gas goes down, drip goes up. As you can see from the chart, another parabolic move just from February the 24th until March the 6th. Before the parabolic move, the drip is around $102-ish. At the highest high of Friday, it went up all the way to $285. It's not difficult for you to calculate. It went up almost 179% in just 2 weeks. So it's very hard for you not to make money. You can see the daily chart. Daily chart on Friday. The uptrend, you can make money. Uptrend, make money. Uptrend, big uptrend here, you can make money. Even the pre-market, how much uptrend it is. Let's say if you bought here the night before and sold here, how much money you can make. And then the day before, the uptrend, right? And then uptrend and uptrend. I trade all those uptrends during those days. Unlike DWT and UWT, drip and gush doesn't have a future for to guide your actions, but still, it's very good to trade because of the price increase. In single day, you can see it went up $62.47. It's almost 30% in one single day. It's really hard, really seriously, not to make money because trading uptrend is much easier than trading downtrend. And then there is nothing too much skillful. As long as you put your heart into it, you have a little guidance, and you can always succeed in those markets. Another pair you can trade during market, it doesn't matter market up or market down, is SQQQ and TQQQ. Most of the year during the bull market, TQQQ always go up so much. But the market crash like that, you trade SQQQ. SQQQ is opposite to NASDAQ performance. When NASDAQ goes down, you can trade SQQQ, and then you almost have this number guide your performance all the time, because during the active trading hours, these numbers are blinking like crazy, right? It goes up, goes down. So you only need to remember which number you bought in, right? And then it goes up, then you can sell it. It's not that hard at all, right? SQQQ, let's see the chart. SQQQ is not as consistent as the oil and then TVIX. All right, it went uptrend and retraced and went uptrend again. So it's not very consistent because NASDAQ is more resistant than Dow Jones at some times. So SQQQ is not the one that I trade the most, but if you really want to get some money out of this market to generate a cash flow, sometimes you will be in the luck when those uptrend comes. Like even Friday, you have 2 great chance to trade over here. Another pair you can trade during market crash is D-gas or U-gas. D-gas is inverse to natural gas. When natural gas goes down, it will go up. Look at the chart, 6 months daily chart. You can see from the worst stock market crash week, it goes up so high as well, but it retraced a little bit. And then every Thursday has a natural gas report. So this Thursday, this past Thursday, the natural gas was oversupplied. So D-gas goes up after the report. So it goes up pretty much, not as much as oil, but it still goes up quite a bit. For you to make some money, you can see the straight up line. It's from here is $279 until $328. So if you have 100 shares, you can guess how much money you can make. This is the future /NG for D-gas and U-gas. This is 6 month chart. As you can see, it's also continuously downtrend. It's favorable to D-gas. I use this as a guidance every day when I trade. This is actual trading results from Friday on the March 6th. I made only one single trade for drip in the morning, $1,546.96, just one single trade. That single trade was for my taxable account. For my Roth IRA account, I made several trades, generated about $455.77 tax-free money. I sold my BND and I traded DWT, Gilead, and TVIX, as you can see. Not big, huge gain, but still a gain. I guess this concludes my today's video. With a little bit guidance, I think everyone can trade to win in any kind of market situation. Even when market sell off like that, you can still trade to win. If you like today's video, please do not forget to subscribe, like, and comment, and share the video with whoever you think will be benefit from today's video. And also do not forget to smash that notification bell so you'll be the first one to know when my new video comes out. Thank you.